So welcome back to the final part. This is part 4, where I do a lot of chart analysis on a variety of asset classes. Just remember, these are futures prices that I need, and also remember that we've just seen all the expiries Friday for a lot of the contracts as well, especially the stocks and such like. And you know, just a reminder, so you know, we've got a lot of inflation data leading up to the FOMC meeting decision this coming week, so you know, expect some big moves, I would say. And of course, you know, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed, and of course CPI could swing it one way or the other. And then of course you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, I'm just going to warn you here, I've moved on now to the September futures contract, as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. Okay, so the first one I'm going to look at, as usual, is the Dow Jones. On the daily, I've got resistance at 35,031. I've got support at 34,603, 34,057, and 33,794. So a bit of resistance there, but we have got sort of that up channel forming at the same time. When we look deeper and on a lower time frame, on the 30 minutes, I've got resistance at 35,238. I've got resistance at 35,084, but that is a breakout level, so just be aware of that. And I've got support at 34,890. You know, as you can see, that was a big sell-off Friday afternoon. Moving on to the S&P, we have resistance at 45.41 and 45.18, and support at 44.58 and 44.50. So there's potential for it to break out one way or the other, especially with the FOMC on Wednesday evening UK time. Looking at the 30-minute, I've got resistance at 45.61 and also 45.19, but that 45.19 is a breakout level. Be interesting to see if it can pop above there and bring some buying back in. Support wise, I've got 44.93. Moving on to the Nasdaq, resistance at 15.523. And support at 15.320 was an old resistance level, and also 15.239. On the 30-minute, resistance at 15.653, resistance at 15.507, but again it's another one of those breakout levels for the upside, and with support at 15.371 and 15.352. So here is the Russell, resistance at 1934 and support at 1839. So pretty big gap between them. We narrow it up slightly on the 30-minute though. Got resistance at 1889 and 1873. With the 1873 being another breakout level if it pops through there, and support at 1856. Now we're going to look at a couple of currencies. So this is the pound against the dollar. I've got resistance at 126.14 and 124.93, and support at 123.80. You can see it's in a downtrend at the moment. You know, back up at 131 was crazy. I mean, that dollar weakness just didn't make sense. But you know, now it's getting back to probably nearer to where it should be. On the 30-minute, I've got resistance at 125.07. I've got resistance at 124.62, which is another breakout on the upside, and support at 123.78. But the dollar sort of held on to its increase this week. It's strengthened up. As I say, it's probably near in fair value again now, considering the strength of their economy against the rest of the world. Moving on to the euro against the dollar, I've got resistance at 108.53. I've got support at 106.32. I've got a nice strong resistance trend line there. You know, the data sort of popped it on Thursday when the when the ECB announced a rate increase. But as soon as they said that it was probably the last one, it got smashed. And on the 30-minute, I got resistance at 107.47, 107.43, which is a breakout, and 107.05 with support at 106.97. So, you know, it's going to break out one way or the other very quickly, I would say, when the markets reopen. So, Bitcoin. I've got resistance at 26.820, support at 24.402. It's in that downtrend at the moment. You know, still perhaps an element of digital gold in there. Looking at it on the 30-minute chart, I've got resistance at 26.815 and 26.581. Support at 26.453, 26.217, and you know, as you can see on Friday, it held really well at S1 and had a good bounce up as the stocks went down. That tended to have a rally. So that's, you know, that's why I say there's potentially a little bit of digital gold still involved in Bitcoin. So here's the two charts, Nasdaq versus Bitcoin, that I add in on a daily basis. You know, it's keeping an element of that inverse relationship. Moving on to gold, again, just continuing its volatility. So I've got resistance at 1954, support at 1922. On the 30-minute, I've got resistance at 1952, 1946, with support at 1938 and 1936. And again, you know, Friday sort of gold reacted a little bit like pre-central bank QE, you know, or QT, where, you know, it had that inverse relationship with the stocks, and it was a bit more of a risk on, risk off relationship. The stocks were dropping, and you saw gold have a rally, and then a bit of late profit taking coming in. Finally, we're moving on to WTI, and that's just been on an upward trend. You know, the OPEC plus cuts this year are now starting to bite into supply. I've got resistance at 91.27 and support at 88.68. I'd just like to point out this is based on the November contract now, because the October will expire this coming week. And last but not least, the 30-minute chart for WTI, I've got resistance at 90.44. I've got support at 89.83, 88.18, 87.66 and 86.13. And of course, you know, I think another thing that's sort of holding oil up is the expectations that demand is increasing, and the US, Biden's released some strategic supplies before. I think they're probably lacking the ability to do that again. If you're looking at sort of potential negatives for oil, if US was to relax sanctions against Iran or Venezuela or both, where there may be that potential in the future. I'm not sure how soon that could happen, but the relationships seem to be mending slowly a little bit there. Then that could bring on more supply, but at the moment we're not seeing that. So you've got to take it as it really is. So I hope you enjoyed that analysis and it really helps you with the week ahead. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, one-week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And